Hey everyone, welcome back to Corporate Decoder. Today we are looking at a filing from System1 Incorporated, and let me tell you, it is a bit of a nail biter. We're diving into a report that discusses the company's status with the New York Stock Exchange. And as always, if you enjoy these deep dives into corporate news, make sure you are subscribed. And join our Discord community linked in the description below. This report is all about whether System1 Incorporated is still meeting the requirements to be listed on the New York Stock Exchange, or the NYSE as it is often called. It is a pretty serious situation when a company gets a notice like this, and we're going to break down exactly what is going on, why it is happening, and what it means for the company and its shareholders. So, on the 8th of December of 2025, System1 Incorporated received a letter from the NYSE, basically telling them they are not in compliance with some important rules. This is a big deal because being listed on the NYSE is a mark of credibility and provides access to capital markets. The main reason for this notice is about the company's market value or market capitalization and its stockholders' equity. As of the 5th of December 2025, the company's average market value over the last 30 trading days had fallen below $50 million. On top of that, their reported stockholders' equity, which is essentially the net worth of the company, was also below $50 million as of the 30th of September 2025. These are critical metrics for maintaining a listing on major stock exchanges. They are looking for companies that are substantial and stable. Now, the good news, if you can call it that, is that the NYSE is giving System1 Incorporated a chance to fix this. They have a period of 18 months to get their market capitalization and their stockholders' equity back up to par. This is a pretty standard process, but it requires the company to present a solid plan to the NYSE showing how they will achieve this. System1 Incorporated has to tell the NYSE by the 22nd of December of 2025 that they plan to submit this business plan. And then they have until the 22nd of January 2026 to actually submit that plan. They need to convince the exchange that they can turn things around and meet the listing standards again. The company is also saying they are looking at all possible options to fix these issues. This means they're not just sitting back, they are actively exploring ways to improve their financial standing and regain compliance. This is a critical moment for System1 Incorporated, as failing to meet these standards could lead to the delisting of their stock, which would significantly impact its liquidity and investor confidence. To keep everyone informed, as is required by the NYSE rules, System1 Incorporated also issued a press release on the 12th of December 2025. This announcement officially confirmed that they had received the notice about not meeting the continued listing standards. Transparency is key in these situations. Now, this press release, which is included as an exhibit with this filing, is basically a more public announcement of what we've just discussed. It's important to note that while this information is being shared, it's being furnished and not officially filed for certain legal purposes. This is a technical distinction, but it mainly means that the company is providing the information as required, without taking on certain liabilities associated with a formal filing for that specific part of the report. The company's stock that is traded on the NYSE is its class, a common stock. This is the usual type of stock that most people would buy and sell. It trades under the ticker symbol SST on the New York Stock Exchange. A ticker symbol is like a shorthand name for the stock. It is also worth noting that System1 Incorporated has elected to be treated as an emerging growth company. This status allows them certain flexibilities regarding financial reporting standards, but they have opted not to use the extended transition period for new or revised accounting standards. This means they are choosing to comply with newer accounting rules sooner rather than later. To put it simply, System1 Incorporated is in a tough spot with the NYSE. They have fallen below key financial thresholds for market value and shareholder equity. This isn't an immediate crisis, but it is a serious warning sign. The company has a window of opportunity, 18 months, to present a convincing plan and show they can get back on track. Their ability to do this will depend on their business strategy and whether they can execute it effectively to boost their market value and profitability. The NYSE wants to see a path back to solid financial health, and System1 Incorporated needs to deliver that vision. Looking at the bigger picture, this kind of notice is often a signal that a company might be facing underlying business challenges. While the NYSE is giving them time, investors will be watching very closely. The risk here is delisting, which means their stock would no longer be traded on the NYSE. This could make it much harder for investors to buy or sell shares and could significantly depress the stock price. The opportunity, on the other hand, lies in their ability to surprise everyone with a robust turnaround plan and successful execution. This situation underscores the importance of maintaining strong financial health for publicly traded companies. It is a constant balancing act, and System1 Incorporated is currently facing a significant test. Will they be able to navigate these challenges and reassure the NYSE and their investors? That remains to be seen. Alright, that is our breakdown of System1 Incorporated's recent filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.